the global financial markets. Okay. Introduction to the global financial markets. Introduction to global financial markets. And in today's webinar, you learn what the financial market is, the stock market, the bond market, the commodities market, and the forex market. What is the financial markets? The financial markets go by many names. Some call it the capital markets, Wall Street, or an exchange. Some even simply call it the markets. Whatever you call them, financial markets are where traders buy and sell assets. This includes stocks, bonds, derivative, foreign exchange, commodities, and most recently, we started talking about cryptocurrencies. Okay, so all these financial instruments, all these assets are what you can trade in the global financial markets. All these are assets you can trade in the global financial markets. Okay, these are every single thing you can trade in the global financial markets, which goes from stocks, bonds, derivatives, foreign exchange, commodities, and a lot more can be traded in global financial markets. So why do people trade? Why do people trade? Okay. The major reason why people trade is to gain profitability and financial freedom. The major reason why people trade is to gain profitability and financial freedom. Corporations like the hedge fund trade so as to increase the profitability of their firms, while individuals trade to gain financial freedom and improve their lifestyle. So basically, the main goal behind trading the global financial markets is to make money, okay? To make money and be financially free. And the global financial market is one place you can go into and decide. Nobody's telling you how much you need to make. Nobody's telling you how you need to make money. There's just a certain method and a pattern you should follow. It can be your method, it can be anybody's method. All you just need to do is follow that method and make money from the global financial market. So it's very, very easy. Very, very easy. Corporations like the hedge fund, they use it to increase their profitability of their firm, while individuals basically trade to gain financial freedom and improve their lifestyle. Thank you for joining me, Uche, now. So how do you access the global financial markets? Trading the global financial markets can either be through a regulated centralized exchange or over the counter. Okay, so let me quickly break down these two things. Okay, regulated centralized exchanges such as the New York Exchange are a physical place where you can go to or and gain access to who you are buying and selling from. Okay, while OTC means you have to go through a dealer to get to your buyer or go through a dealer to get to your seller. Okay, so an exchange traded market operates via a centralized exchange, such as the New York Stock Exchange, the London Stock Exchange, the Tokyo Stock Exchange, and many more around the world. Okay, so over-the-counter market is majorly a decentralized market that is made up of different dealers who will link you up to a buyer or a seller. Okay, so when it comes to over-the-counter markets, the financial markets can be categorized into the following. Okay, can categorize into many things. Okay, the stock market is one of the categories, the bond market is one of the categories, the commodities market is one of the categories, and the foreign exchange market is one of the categories where you can actually access the global financial market OTC using the OTC method. Okay, so let's talk about the stocks market. So has anybody on the call heard of the stock market before? If you've heard of the stock market before, type a yes in the chat box. If you've heard of the stock market before, type a yes in the chat box. You've heard of the stock market, or you've even traded stocks yourself, type a yes in the chat box. If you've traded stocks yourself, you've heard of the stock market, you've traded stocks yourself before, type a yes in the chat box. Okay, let's do that real quick. If you've heard of the stock market before, type a yes in the chat box. Okay, type a yes in the chat box. If you've heard of the stocks market before, type a yes in the chat box. Okay, Okay, I will just gladly explain what the stock market is, since I think nobody has heard of the stock market before. But the stock market is quite popular, I believe. It's quite popular. Possibly we've heard of it from a friend or from somebody before. So, real quick, for questions, drop your questions in the question section. For polls, I send out polls times. I just sent out a poll right now. Let's do well to respond to it. Okay. So the stock market is where you can buy or sell the shares of public companies. Okay. The shares of public companies, you can buy or sell them in the stock market. Okay. So let's say, for instance, you want to trade Apple shares. The stock market is where you go to. You want to trade Apple shares, the stock market is where you go to. Okay. And each shares comes at a price. Okay. Each shares comes at a price. And investors can either make money when the stocks do well, which is called buying. That means the stocks is going up or going long. Or they don't make money when it is going down or going short. But the type of product that we offer you in the global financial markets, if a stock is going up or if a stock is going down, you can make money both ways. You can make money both ways if a stock is going up or going down. That's called the derivative market. Okay. The bond market. The bond market is known as the debt market. Okay. Now, every single explanation about the market is just basically the regular market, just that this is done online. This is not done physically. It's done through a broker such as Eagle Global Markets, where we give you access to trade the global financial market. So, like I said, the bond market is known as the debt market. Okay. The bond market is a financial market that deals with the trade and issuing of debt securities. Okay. It deals with the trade and issuance of debt security. It offers opportunities for companies and the government to secure money to finance a project or investment. Okay. In the bonds market, investors buy bonds from a company and the company returns the amount of bonds within an agreed period plus interest. Okay. So it's just like you're lending money and returning it back with interest, but this is done in the global financial markets. When we talk about the commodities market, okay, the commodities market is where traders and investors buy and sell natural resources. Okay, this is a type of market where traders and investors buy and sell natural resources. In this instance, we are capitalizing on the price in or the market value of a certain financial instrument. We are capitalizing on the market value of a certain um, natural resources in this instance, such as the price of corn, the price of oil, the price of meat, the price of gold, the price of silver, the price of aluminum, so much more. Okay, so much more. So this is a specific market that is created for such resources, such purposes, because the prices are unpredictable. The prices can never be predictable. Like for instance, a bag of rice is sold for a range of 25,000 to 27,000. Next week you could go and they'll tell you the bag of rice is still sold for 30,000 or so. So the prices are unpredictable, very, very unpredictable. So the foreign exchange market, the Forex market, okay? The Forex market is the most commonly known of all markets. Have you heard of the Forex market before? Yes or no? If you've heard of the Forex market before, drop a yes in the chat box. And please, let's respond to the poll, okay? I sent out the poll. Please, let's respond to the poll. Have you heard of the Forex market before? If you've heard of the Forex market before, drop a yes in the chat box. If you've heard of the Forex market before, drop a yes in the chat box. If you've heard of the Forex market before, drop a yes in the chat box. If you've heard of the Forex market before, drop a yes in the chat box. If you've heard of the Forex market before, drop a yes in the chat box. Just go to the chat box. Let me drop a message there. Possibly we all can't find the chat box. So let me drop a message there and we'll get to see it all together. Okay. We get to see it all together. Okay. I just sent the hi in the chat box. So in case you missed the chat box, if you've heard of the Forex market or any of these markets I've been talking about before, drop a yes in the chat box. Okay. Just drop a yes in the chat box. If you've heard of this market or any of the markets before, drop a yes in the chat box. If you've heard of this market or any of the markets before, drop a yes in the chat box. Just drop a yes in the chat box real quick. Let's drop a yes in the chat box. Okay. 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 Somebody's typing in the chat box. Let's see. Okay, so like I said, the forex market is the most common known of all markets. Okay, the foreign exchange, to be precise, forex is the decentralized market where currencies are bought and sold. Brilliant, Magaji, brilliant, brilliant. Where currencies are bought and sold, they are basically the markets where currencies are bought and sold. Okay, where currencies are bought and sold. So about $6.6 trillion. Okay, $6.6 trillion is traded per day in the forex market. About $6.6 trillion is traded per day in the forex market. Okay, um, that is what is traded in the forex market every single day. $6.6 trillion. $6.6 trillion. So, giving you a conclusion on the financial markets, a major conclusion on on an introduction to the financial markets, a major conclusion on it, which is the fact that it is safe to say the financial markets is very essential to us. Okay, very very essential to us, very very essential to us. The financial market is very 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 essential to us. It is the best and most less risky way to acquire more wealth. You want to acquire wealth, you want to grow wealth, the financial market is the best way for you to do it. $6.6 trillion. Nobody's telling you how much you need to make or how much you need to take away from it. Okay? Nobody is giving you that rule. You just need to step up in, decide this is how much you'll be making per day, and start making the money. Because it's very, very, very easy. Very, very, very easy. Very, very, very easy. It is the largest market in the world. The global financial market is the largest market in the world. It is the largest market in the world. Largest. No market is bigger than it. The stocks market is just valued at billions of dollars. The cryptocurrency market is valued at $2 trillion. But the forex market is the highest of them all. Which, if all of them combine together, they are, or they make the financial markets the biggest of all markets in the world. Okay, it has various branches also. The global financial market has various branches, such as the stocks, the bonds, the equities, the foreign exchange, the cryptocurrencies. You can select anyone you like and make money from it. And lastly, it is the most advantageous market in the world. The most advantageous market in the world. The most advantageous market in the world. So this is just the major idea, the major concept behind an introduction to global financial markets. Now, we'll be moving into what a financial instrument is. What a financial instrument is. And you get to understand what really a financial instrument is, so that if you'll be trading in the global financial markets, if you'll be capitalizing in the global financial market to make your profits, to make an earning from, it will be very, very easy for you. Also, we are going to talk about the trading terminologies, a few trading terminologies in the global financial markets, in the global financial market, so you can understand these terminologies as it goes on the go. So you are able to capitalize on them. You don't even need to stress on it that much. You just need to understand few terminologies and get started on it. Okay. So I will send out a poll right now. Let's please respond to the poll. Okay. I'll send out a poll right now. Let's do well to respond to the poll. So I'm sending it out right now. I just published the poll. Are we all following? Yes or no? Are we all following? Yes or no? Are we all following? Yes or no? Just please respond to the poll, okay? Do respond to the poll. I'm trying to load the slide for what financial instruments are. Okay? Yeah, great. So are we all following? Yes or no? We are following. Great. Okay, great, great, great. Thank you very much. So, what are financial instruments? What are financial instruments? That's what we'll be moving on to now. Okay. What are financial instruments? Financial instruments are what you trade in the global financial markets. Okay, we said we trade financial instruments in the global financial markets, or in every financial market. What are traded is financial instruments. Okay, so these are assets that you as a trader can transact based on speculations to make profit. So you can buy or sell to make profits from any of these markets. You can either decide to buy or to sell, and you make money either ways. And these assets are of different types and classes, but they majorly are the forex market or the forex financial instruments, the indices financial instruments, the commodities financial instruments, and the stocks as a financial instrument. Now, moving on to forex, okay? The foreign exchange is the trading of one currency to another or for another. The foreign exchange is the trading of one currency for another. In simple terms, is the trading of a country's currency against another. For example, the US dollar against the euro or the Japanese yen against the sterling pound. It is one of the most actively traded markets in the world with an average daily volume of $6.6 trillion. If you decide to trade Forex alone, you can make all your money from the $6.6 trillion. You can try to make as much as you want from the $6.6 trillion. Currencies are assets that are traded in the Forex market, and they are traded in pairs. Like I said, they are traded in pairs. For example, AUD/USD, the Australian dollar against the United States dollar. CAD/JPY, the Canadian dollar against the Japanese yen. GBP/NZD, the Great British pounds against the New Zealand dollar. We make money, okay? We make money by buying or selling any of these financial instruments or any of this currency pair in the financial market. So I have a table right here. AUD/USD, buying. Transaction, you are buying. What it basically means is you are buying the Australian dollar against the US dollar. Possibly, you are buying the Australian dollar against the United States dollar because of Australia has a good economy or a better economy than the United States dollar. Or you feel the coronavirus is not affecting them much in the Australian region and the coronavirus is affecting them much in the United States region. So you decide the economy for the Australian dollar will grow further than the United States dollar. That's just like the ideas or the reason you might be buying AUD/USD against USD, okay, against the dollar. Now, CAD/JPY, you're selling. It means you're selling the Canadian dollar against the Japanese yen. Why are you selling the Canadian dollar? It basically means possibly the Canadian dollar is not doing well and the Japanese yen is doing well when it comes to an economical perspective. Okay, so to GBP/NZD buying, it basically means you are buying the sterling against the New Zealand dollar, which means the Great British pound is doing better than the New Zealand dollar because of possibly Boris is doing a good job in the UK, and you feel the New Zealand region or the EU region for which the New Zealand is based in is not doing well. So that's just one of the economical reasons you might be looking to buy AUD or GBP against NZD. So indices are assets in the global financial markets that measure the performance of a group of stocks. It measures the performance of a group of stocks. The indices market is one of the best markets to trade. Okay, the price movements and volatility are impacted by economical factors, and one of the reasons why it is interesting to trade and profit from. That is just one of the reasons why it is interesting to trade and profit from. It's one of the reasons why it is interesting to trade and profit from. Okay, so when the businesses and economic climate of the country is growing and is stable, these stocks, these assets move up, and they go down when things are not looking so good. And the amazing part is that you can make money from either buying when it is going up or selling when it is going down. They can be traded in the financial markets on all our platforms. An example of an indices you can trade on our platform is the nickel, the DAX, that's the German 30, US 30, Wall Street, or Dow Jones. US 100, Nasdaq or US Tech, S&P 500, which is the US 500, and many more. We have the US 2000 and a lot more on our platform that you can trade. And I like trading these ones more, though. I like trading these ones more because of I can make a lot of profit from it immediately. That's why I like trading indices more. Once I can trade EUR/USD and GBP/USD, which are Forex pairs, I trade indices more because the profits to be made on this are mad. Like a lot, amazing profits to be made. Okay, so commodities are another class of assets. Okay, commodities are another class of assets, just like the indices and the Forex currencies. They are raw materials in the form of financial instruments that can be traded in the market. They are typically sorted into 4 categories, which are mainly metal, energy, livestock, and agricultural. Example of these commodities are gold, oil, silver, coffee, and many more. In the commodities market, you can trade all of these things. These physical products you buy, you can trade their derivative price value on the global financial markets without any stress at all. Without any stress at all. The stocks market, also known as the equities market, are one of the most well-known financial instruments. Because when I asked, does anybody know stocks? Nobody said anything. If you've heard of stocks before, please type a yes in the chat box. I want to know those that have heard of stocks. Or if you've heard of any of these financial instruments or these financial assets before, drop a yes in the chat box. Just drop a yes in the chat box. If you've got any question at all, drop your questions in the question section. If you want to respond to any polls I've sent out before, check the poll section and just click on yes or no. Be honest with your response on the polls. Brilliant. Someone said they've heard of stocks before. Anybody else? Anybody else? Okay, Uchenna says he's heard of stock before. Great. Okay, I'm glad some of us have heard of most of these financial instruments. Okay, stocks is the most well-known, even if you've not gotten, even if you've not been gifted or gotten $1 before, or a pound before, or a yen before, or a Chinese yuan before. Wow, you should have heard of the stocks market before. Okay, so this is a group of financial instruments that are traded in the derivative financial market space. Okay, you as a trader, you can go long, which is to buy. Okay, and you can go short, which is to sell, based on the market speculations. You can decide to do any of this based on the market speculation. If you are looking at it that Tesla will do well, buy Tesla. If you're looking Tesla won't do well, sell Tesla. If you are looking at the fact that the Apple products, the iPhone 13 is just a replica of the iPhone 12. It's just an example, okay? I'm not trying to stop anybody from getting an iPhone, but it's the same. There's no difference. Like if it's not going to sell much, then you sell Apple. If you believe it's going to increase Apple sales, you buy Apple. That is just a sentimental approach towards trading in the stocks market or in any markets at all. Once you understand, you can weigh the options. That's how you trade the global financial markets. Okay, so examples of companies you can trade their stocks on our platform are Apple, Google, Facebook, and many more. Okay, so in the next slide, you will understand terminologies in the financial markets. And very, very soon, I'll be showing you on our next class, I'll be showing you how to trade on our platform. So let's go to the terminologies. Trading terminologies. So these terminologies are just the little things you need to understand when it comes to trading the global financial markets. Little things you need to understand. There's no need for you to bother yourself about knowing them all. Just the little things you need to understand when it comes to trading the global financial markets. Trading terminologies are terms you need to know in order to improve your understanding of the financial markets. And we have listed the most important. See, in terms of importance, we've picked out the best and we've listed them out so everybody can be able to understand and capitalize on them. So you don't need to start racking your brains around trying to understand what is a peep, what is long, what is short. No, all those things we've done it in this slide. Okay, so the first thing is leverage. Okay, leverage. Now, the textbook definition of a leverage is borrowed money. Okay, is borrowed money. But I'll break it down to you in a very, very easy method, which is the textbook definition of leverage is having the ability to control a large amount of money using none or very little of your own money while borrowing the rest from your broker. Now, let me make it very, very clear to you, which is the fact that when it comes to leverage, you can decide to either you can decide to either use leverage or not. You can decide to either use leverage or not. You can decide to either use leverage or not. You can decide to either use leverage or not. So I'll send a link in the chat box right now. I'll drop a link in the chat box right now. You can join a private Telegram group. Okay, a private Telegram group for beginners. You and I'll walk you through every single stage and bridge you quite well so you can be able to access our public group where we talk about the markets in detail, where it is much more broad. Okay, so this beginner group is just to give you an insight, an idea to bridge you so you can understand how to trade global financial markets on your own. Then you can move on to the big boys group. Okay, so leverage is borrowed money. Now, if you go to the bank to borrow money, they'll tell you, do you have a bit of a deposit? You can drop a deposit or using your house documents or your car documents, anything at all. Okay, you just want to have something at hand to know you won't run away with the money. That's just the same explanation of leverage, but it's quite different in the financial market because you already have your capital. They're just giving you access to more capital so you can be able to have more buying or selling power. Okay, leverage is essentially a loan that is provided to you by us. We just put it in your Forex account, which is going to allow you to trade and capitalize on more moves. So let's take, for instance, to control a 100,000 naira position, all we need to do as a broker is to set aside 1,000 naira. That's a margin of 1,000 naira from your account. If you have a deposit of 10,000 and you want to place a trade of 100,000 naira, all we need to do is just set aside 1,000 naira and let you place a trade of 100,000 naira. So in this ratio, your leverage is expressed as 1:100. That means, or 100:1, which means if your deposit is 10,000 naira, we can give you an access to control 100 times your deposit. Okay, so that means you are controlling, in this scenario, we are using 1,000 naira. So if your deposit is 1,000 naira, you are going to be able to control funds worth 100,000 naira. Now, a pip is short for percentage in points or price interest points, which just represents a tiny measurement of a change in a Forex pair. Okay, an increase or decrease in price is represented by a pip. It can be measured in terms of the quote or in terms of the underlying currency. A pip is standardized unit. Okay, a pip is the standardized unit and is the smallest amount by which a currency quote can change. It's the smallest amount in which you can make profits or lose part of your capital. For example, if ERAD price moves from 0.7747 to 0.7748, we just say that is a 1 pip increase. Okay, a 1 pip increase in price because we moved from 0.7747 to 0.7748. That is what a pip is. Spread and lot size. Let's talk about spread. So in the Forex market, spread is the difference between the bid price, the price you're selling, and the ask price, the price you're buying. There are two prices given in the currency pair on any financial instrument, okay? Because the financial market is all about buying and selling. And those two prices are the bid price and the ask price. The bid price is the price at which you can sell your financial instrument, while the ask price is the price at which you can buy your financial instrument. And a lot size is the unit measurement transaction amount. Okay, it's the units that measures the transaction amount. It refers to the quantity of the financial instruments you are either buying or selling. And we have three types. We have the micro lot size, mini lot size, and standard lot size. Okay. So when you place your orders are placed in terms of lot. The bid and ask price, like I said, the bid price is the price at which you are willing to buy. The ask price is the price at which you are willing to sell. You are, as a trader, you are the buyer and you are the seller. You can decide to buy or you can decide to sell. It depends on you. Okay. So going long and short. Going long means to buy a financial instrument. Going short means to sell a financial instrument. Take profit and stop loss. A take profit is the type of market order that tells us as your broker to close your trade and lock in your profit when it reaches a certain target. That is what a take profit is about. Okay? A take profit is basically you telling us to close your trade if the market goes and hits your targets. If the market goes and hits your target, you're telling us to close your trade in profit. Okay? Then we have the one that protects your capital. The one that protects your capital, which is a stop loss. A stop loss is another important type of market order. It's just similar, but it's the opposite of take profit. Yeah, you are telling us that once you start losing money, close my trade for me. I don't want to lose money again. Just close this trade for me in the small loss that it is in. Okay? So we help you close your trade when the market is going against your direction. So you see, it's not all about closing your trade in profit. You can also set a stop loss to protect your capital when you're trading the global financial markets. Some trading tools that you might need to know. Okay, so it's first one is a moving average. Okay, a moving average is a simple technical analysis tool that smooths out price data by creating a constantly updated average price. It tells you the average of a certain number of past previous price action, whether it is increasing or decreasing. So in a very simple layman term, a moving average is a line that you can put on your chart to tell you if price is going up or down. That's just a very simple layman approach to moving average. It is a line, a tool, a line that you can put on your chart to tell you if price is going up or down, which is very simple. You can use that to buy or to sell. Pivot point is an intraday technical indicator to use to identify trends and reversals on a chart. So pivot point is like, let me talk about support and resistance, then come back to pivot points. Okay. So support and resistance are used by traders to refer to price level on the chart that prevents the asset from getting pushed in a certain direction. So support and resistance are areas in price where you look to buy or sell a financial instrument. If it is a support, the word support means you'll be looking for buying opportunities. The word resistance means you'll be looking for selling opportunities. So pivot points are just relatively like support and resistance, but this one is based on every single day. Every single day. That's what support and resistance, that's what the pivot points is based on. So it's basically support and resistance that will tell you where price is likely to go to every single trading day. Fibonacci retracement tool. So the Fibonacci retracement tool is a popular tool that draws support and resistance line for you on the chart. It can tell you where to put your stop loss, where to put your take profit. It can also tell you when price is likely to reverse, when price is likely to continue in a certain direction. That is the fun part and the most interesting part about a Fibonacci retracement tool. So let's talk about the market participants. There are quite a number of market participants, but let's talk about the most important one. Okay, first is the broker, e.g. markets. Okay, in a very simple term, we give you access. I don't like the word trade. We give you access to grow your wealth in the financial market by trading in the global financial market. So we are in the business, or we are in the service of providing you access to grow your wealth by trading the global financial markets. An exchange is a marketplace where you trade stocks majorly. Okay, an exchange can be stocks or derivatives or anything. It can also be called a trading floor. Okay, so regulators, these are just people that set certain rules in the financial market, so people can also always abide by certain rules. They are the one that helps understand who is manipulating price and all, so that they call those people to action, sue them, and tell them to pay a certain fine. Okay, so you see, the market is not rigged; it's always there for you. And there are people to, like, they are like the policemen Okay, they're like the policemen of the industry. So an investor is someone who invests. I don't want to even use the word invest. Someone who commits capital to the expectation of receiving financial returns, ROI. Okay, ROI. Someone that puts his money in a certain financial instrument and expect to get returns on it. Okay, so a bank is a financial institution that receives deposits and give loans out in the financial markets. Okay, and they move price also. The banks determine the interest rate. The banks determine pricing model of price moving in the financial markets. So this brings us to the end of today's webinar.